Hello everybody. Today will be our second regulation class and we are going to go over individual tax return. Individual tax return. For individual tax return we are going to use the form called 1040, and today we are just going to go over all what the items consist form 1040. Once it is recommended that you get familiar with this form 1040, and once you get a grasp of 1040, and then we will go into details of those each items that consist 1040 form. And it starts with the gross income. Gross income is simply the money you make for the business year, like such as sales commissions, service fees, or whatnot. And then IRS lets you deduct some of the expenses from gross income to minimize your tax return. Um, for above the line deduction, there are items like alimonies you pay for your spouse or moving expenses. As I said, today we're just going to go over the overall 1040 form. And then starting from tomorrow we'll go into details of those each item. So today just trying to get familiar with how this 1040 form looks like and what are the items are there. Once you deduct above the line deduction from your gross income, it will get you adjusted gross income, and IRS lets you deduct more deductions from your adjusted gross income, which is standard deduction or itemized deduction. And you cannot use both, but you get to choose greater. You get to choose one of these two that gives you a greater deduction. Standard deduction is pretty much depends on your marital status. Let's say if you're single, it's a given deduction by IRS. If you're single, there's like $3,650 deduction you can take out from your annual adjusted gross income. If you're married or if you're single but if you have a dependent, depends on your marital status. There's different amount of deduction that you can take out from your adjusted gross income. Once again, today you're just trying to get familiar with this form 1040, and tomorrow, starting from tomorrow, we're going to details of each items in this 1040. So today just trying to get familiar with this form, how the form looks like and what the items are there. And itemized deduction is something called such as medical expenses or charity contribution, or like some donation, or interest expenses for your mortgages. So when you when you are doing your tax return, you work up your standard deduction and itemized deduction, and whichever gives you a credit deduction, and you are going to use that that amount to deduct from adjusted gross income. And then there's something called another deduction, like personal exemption. Like if you have depends on how many dependents, like your kids. IRS that you take out like $3,650 per kid, like dependent. So, and this amount, like dependent amount, like personal exemption amount, can vary each year, but such as you don't need to recommend. I don't recommend to memorize because the numbers can vary. So let's say before you going to take your CPA exam, make sure pretty much the amount of personal exemption will be given to you. So I don't recommend you memorize all this exemption amount. So once from your adjusted gross income, then you take either standard deduction or itemized deduction and personal exemption. and then you deduct personal exemption, it would give you like taxable income, and depends on the taxable income amount. There's a like different tax rate will be applied. So so you multiply this tax rate to the taxable income, then it will get you tax liabilities, and then tax liability is pretty much the final tax amount that you need to pay, and then there's something called like additional tax, like for those high income generating individuals. IRS, they apply like more taxes, and as I said, we're gonna go into details later on after this lecture. So don't try to get to know all the details today. Just trying to get familiar with the form. So once you add this additional tax, then finally they let you take another deduction called like tax credits. Tax credits is depends on like if you have a child and you gotta pay for your child care expenses, and if you support your elderly then or disabled, then IRS let you take out more deduction through this tax credit items. And if you pursue like higher education, that also can be deducted as like tax credits. So once you take add like additional tax to tax liabilities, and then you deduct another tax credit, then we get you a final tax due, and that's the amount you're going to pay for your tax each year. And that's it for the class of today, and stay tuned for more to come, and take care, everybody. Thank you.